Hello, 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 everyone. Mike Arnold here, co-founder, Pat Trading Partners, along with Bob Iacchino. So, what a week in the bounce back technical rally. Still in bear mode on a number of markets. Some have shifted to neutral mode or an aggressive buy mode. So, where do we sit right now? Let's just take a look at the overall bigger markets. We have things like the S&P still in sell mode. Interesting enough, with the head and shoulders pattern, I'm expecting a pullback, by the way. Remember, we have the Fed rate hike on Wednesday, and we have a lot of other good information out this week. A lot of financial reports out, and we have non-farm payrolls on Friday, and it is month end tomorrow, so it could be the end of the window dressing. Now, even within this, if once we get a pullback, we could still see the rally to complete the head and shoulders patterns, which would not tip it into long-term buy mode on the S&P nor on the NASDAQ. The Dow, on the other hand, is on the aggressive buy mode. Still in the other, I have modified rules for this, which would be neutral mode at this point. Would not be chasing the Dow higher. Why? When first things tip into the aggressive buy mode or sell mode, you generally see a counter trend reaction. This just tipped into buy mode. Let's see the counter trend reaction if that does unfold. But it is, from my perspective, when I follow the modified rules, because everything isn't always in a buy or sell mode, this would be technically in a neutral mode for me. And that's another addition I'm making into the channel. And the Russell still in sell mode, although this little double pattern could theoretically tip that into neutral mode also should the rally continue and hit. It's already hit the first target on the double. All right. Now that we have that out of the way, and I hope everybody's doing fantastic. Before we get into the sectors, and by the way, if you are new here, please do consider subscribing, ringing that bell, and hitting the like button. We're going to be rolling out more and more different segments on this channel, especially since we keep growing in subscriber base. Also, we will be releasing our technical trading setups and analysis methodologies in the very near future, so you'll want to be subscribed to the channel for that. All right, so energy still in buy mode. Hit that 87.5, watching for some potential. This again shifted from, I just say that, but hit the 87.5. Gonna watch for some more topping price action in here, but it is still in long-term buy mode on the daily. There's no strong reversal pattern just yet, but your key support is anywhere back from about 87 to roughly 84.50. That's your key support zone. So any pullbacks are still above the last major highs and within the rotation zone to watch for another rotation back up again. No substantial topping patterns, so energy is still a bull play. Very overbought, so would not be chasing anything higher, would be using any pause or pullback to adjust longer term stops higher. XLRE still in long-term sell. I would not be personally chasing this. Yes, we have a flagging channel pattern higher. Again, stuff just keeps moving on me. A flagging channel pattern higher right here against some key resistance. If it does push up a little more, first area is about 37.30 and 37.80. But I'd really be using this area to unwind any short-term plays in real estate. Longer term, we should see another rollover and still a long way off from any buy patterns. This is just a counter trend rally. Also remember, your major breakdown level is still 39. So we could see a pullback and then another push higher, but anything up is just counter trend rally. So would not get aggressive from my perspective in real estate sector. XLF Still in sell mode, long term. Short term, there were some aggressive buys setups in here. Would be watching for a pullback now. We are above some key levels with very overbought cycles at the top. Now, did close above the 62.5. So would still be watching for more bullish plays after a pullback or a pause. The next key area to watch for in the push up is 35 to 35.20. All right, the major pullback area, the support is coming back at 33. So that's the area I'd be watching right around the prior resistance or support becoming resistance, becoming support again. Right around 33 on any pullback for financial plays. So financial, even though it's still in long-term sell, could get to neutral mode and potentially tip into long-term buy after we get a pullback reaction. XLK, technology, still in long-term sell. Counter trend reaction. And this is a tough sell on a head and shoulders. The only aggressive thing would be with this mini, but you don't have shoulder symmetry at all. So would not be using that. Next areas I'm watching though on any push higher, 132.23. Minor support though is about 127.50. We break back below minor support. I'm then watching for a pullback in technology. Now we might have a little potential. This could be off the table pretty quickly. But if we start pulling back on Monday on a daily close below 123.89, we could see a bigger pullback. That's not to new lows yet in technology. That's just a bigger pullback. So I'd be patient chasing technology stocks. Technology can still be played to the upside in a counter trend rally. Again, next target 132.23, then 137. But anywhere up in here, I will watch for a more substantial rollover play. So, and even if you got up here, would not tip it to neutral or long-term buy mode. XLI, industrials. Remember, we had the double bottom pattern completely played out, returning to the 200 MA. Still have a little gap left behind, but this was a bullish play that was triggered back on the Tuesday the 18th. So industrials have rallied nicely. Going to be watching for a pullback, major support coming in around 91.60 to 91.04. Would not be surprised, especially with the reaction to the 200. Now, we did close above the 62.5. And we're technically in neutral mode / aggressive buy. All right. Aggressive buy. I would be watching for the pullback, then a continued play in industrials higher. This moved again, but it's still above the 62.5. So overall, after a pullback, I'd be watching for a potential return to about 98.70. The overall non-aggressive buy, it just would put it in neutral, but the overall conservative buy would be above 101. XLY, consumer discretionary. Again, long-term sell, counter trend rally, flagging pattern. There's this consumer discretionary, unless there's something in major outperformance mode, is just a very weak counter trend rally at this point and not focusing on it. Even on a return to about 149, not a bullish pattern, just a flagging pattern up here, and breaking even above this, above the 150 area would not turn it into a bullish buy just yet. So, consumers discretionary is just something to steer clear of unless you have major outperforming stock. XLP consumer staples, on the other hand, finished this double bottom pattern. Watching for a topping area, especially up against the end of the clear path move, is technically here. This little clear path move. So we're into a key resistance area. Did not close above the 62.5. I am watching for a pullback. First area of support is about 71.80. Then major support coming in about 71. So I'll be watching for a pullback. If we do pop a little higher at the beginning of the week, major resistance, we have this gap, but I'm not even watching for a full gap play, would be 73.65 to about 73.890. That would take us to the 200, and then I'm really watching for a short-term pullback. It is in aggressive buy mode, but based off the rules I followed, this would be more of a neutral mode. So I can be pickier with some plays in here. No need to chase it. The key close was 73.17. 73.19 was the level necessary to close above the 62.5. Did not do it yet. So definitely still playable in consumer staples. I need something that is outperforming or has good patterns in it, though. XLV, healthcare. Healthcare is back to neutral, could be shifting into a full-blown buy mode. Now remember, we had the daily buys. They triggered back on Monday the 24th, and you see first target, second target hit. Now there is a little topping pattern here. So we start getting below 130.51, watching for a potential full pullback to at least 128.41. That would not invalidate this bottoming pattern, though. So longer term, not only are we shifted to neutral mode, we should still see a retest of the highs back from mid-August after a potential pullback. So healthcare still very, very, very much in play from a bullish perspective. Even though the long term is aggressive buy, conservative hold, or conservative more neutral, we have the short-term pattern still suggesting higher prices after a potential pullback. XLB, so materials, has triggered a buy mode on both a daily and a weekly. The longer term system is still in sell mode, but we will go off the shorter term double bottom patterns. So XLB, the material select, is still in play. Watching with overbought and cycles at the top for a pullback. It can pull back substantially without invalidating this double, but the first pullback area is about 72.85 to about 72. So that's the area we'll be watching for pullback, and then reevaluate any material plays. Overall, the next targets are, and the next key one is the 62.5 and the first target from that double coming in just in front of 76, then 77.40, then 78.91. So I am, due to a number of reasons, looking for plays in material select. XLC, communications, still long-term sell. More, we had this horribly sloppy head and shoulders pattern, because ill-formed shoulders was watching to see if anything could get traction in XLC. Triggered it, then done. So again, this is why it's so challenging to trade against a very weak sector in long-term sell mode. I'm just sticking clear of it. There's nothing to do here. XLU, still long-term sell. Daily, we did know this was not a double, too much separated, but trade trigger into a clear path move. Still watching, unless, especially up through potentially midday Wednesday, for some very short-term utility plays. But then being it's still in long-term sell mode with potential more volatility in the treasury market, and this is very interest rate sensitive. We'll be looking for a substantial pullback play, especially since it overbought with cycles at the top. So would not be aggressive on XLU and still in long-term sell. So watching for that pullback and reevaluation right there. It does have a little potential more room to the upside with the end of the clear path move and the 50 overhead, but that's very minor and could be hit Monday or Tuesday of this week. So would not be chasing things. XRT, retail, still in long-term sell. In this horribly sloppy, messy pattern, but has hit the first that was triggered back on Tuesday the 25th. Stalling out at that first target you see here. 1, 2, 3. Still has some potential more upside ahead. And a gap potentially still ahead. But the major area I'm watching is the final target, 65.46 with the 50% harmonic for any retail plays. And they have to be outperforming retail plays. Why? Because it's a long-term sell. So still some upside potential in there. Just even on a pullback, which we could easily see a pullback to about mid 60, 50 cycles at the top, overbought. So I would be cautious at chasing retail besides unless we get a pause or a minor pullback first. Transportation, still long-term sell. This is just trying to break out of a horizontal channel at this point with a pullback and a retest. And you see 1, 2, 3 chip aways at the 50. So transportation plays are still a possibility here. I'm just going to put out the harmonics, the forward harmonics. So here's the next key level I'm watching for on a push higher. So even though this is a counter trend play in transportation, especially if we start getting a close above 213.40, then my next major target is about 219.75. So that's just some short-term transportation plays. We're getting to overbought and the top. So as long as this does not break below 207.25, transportation plays are still a consideration. SMH, semiconductors, counter trend rally, still in sell mode. We should still see some more downside ahead. We do, however, have AMD reporting this week. AMD reporting on Tuesday after the close. But anything with semis is still just a counter trend rally to me. The next target area is 197 on the SMH. Would not get overly bullish in this. DBC commodities, still long-term buy, still caught in a horizontal channel. Besides energy not being very aggressive, even though it's in here, it has not been able to get overall traction. So there's not much going on in commodities just yet besides energy related. Agriculture is in now from buy to really hold mode. We break down below this low, it'll go into sell mode. It's technically an aggressive sell mode. Conservative sell mode would be below 1932. Not touching agriculture right now. Gold is technically gold miners. Now, gold could be starting another rollover. Hold on one second. Gold could be starting another rollover. So keep that in mind. We did have this little mini double trigger and complete, but not rolled into the bigger pattern just yet. It is still in long-term sell. The only thing that gets me bullish since that short-term bullish pattern's done is a daily close above 226.11. Other than that, I'm sticking with Long-term bearish just because gold could be starting another rollover pattern. Now, if we get above a 26.14, we'll have to evaluate this next week if we do get that daily close above that to see if a weekly close. Then we could have some more short-term bullish upside in gold miners. Other than that, now sitting on hands. Value finished the double play. Technically in neutral mode after the double has, or aggressive buy, but I'm going with neutral mode. That is done. Value plays are still in the book, but we're watching for, especially coming up against the end of this advanced clear path move. The 200 overhead, still a little gap left behind. We should still see higher prices after a pullback. So I'm watching for a pause and a pullback, but value plays, if they are true value plays, are still, that's sort of funny, True Value, the hardware store. Sorry, distracted myself with a silly, horrible joke. So true value plays are still are still a good thing with a pullback. Key support 134 area. Now, we probably just lost subscribers because I made a true value joke. Growth, still in long-term sell, not even in neutral. This little very sloppy head and shoulders, triggered, pullback here. I need a growth close above 227.50, and then I'll get a little more aggressive with growth, especially watching this first target area of 235. So I want to see how growth performs early this week, but it is still in a potential counter trend play for growth that would not even take it back to long-term neutral mode. So I need something in the growth sector that's outperforming even with this strong market rally, and would not be surprised to see growth trigger another pullback. If we do get a key close really back below about 218, I'd be very patient on the growth sector. All right, everybody. So that's where we sit for now with this weekly stock sector overview. If you do like what we're doing, please consider subscribing to the channel, like the videos, leave some comments too. Get other people interested in these videos. I'm going to be going over more things, especially start more stock roadmap videos where we analyze a stock more in depth, which then you can utilize to hopefully help structure either swing trades or portfolio trades in the coming months. With that, I will talk to everyone later. Bye for now.